Good morning, everyone. A few little difficulties today pre-market here. My Sierra just got it shut down on me, so I had to kind of play around with that. So I'm starting a little late today. It is October 16th, Wednesday. Wednesday after a pretty big downside move in the market, something to take a look at today. And today, what I'm going to be trying to do is we'll do a midweek update as things shape up, and we'll take a look at a few kind of profiles as well as different equities to get a better. What we got going on yesterday, we had a pretty big downside move in the overall market. There was a lot of selling that was happening at the open, pretty much in these equities. And a lot of it can be kind of traced back to what had happened with semis. So semis in a tougher little position right here, as we saw that ASML, right, a Dutch company from all the way from the Netherlands, reported earnings into the, and we saw a massive downside move. The stock yesterday alone is down over 16%. So a total of $420 billion value in chips dropped after ASML. Value in chips dropped after ASML lowered its 2025 forecast and revealed that it booked about half the orders Wall Street expected in the third quarter. While the shares were down about 16, nearly 17%, the news also took a beat down in other semis. Naturally, Nvidia, a big constituent, was beat down pretty heavily yesterday. Obviously not to the extent that ASML was. We're trying to gap up right now pre-market. AMD was slapped down. We saw that Taiwan Semiconductors got beat down, trying to gap up a little right now. AVGO, like all the semis across the board took a beat down, which pulled especially the tech market down drastically into yesterday's session. So what we saw from ASML, the chip equipment supplier, it slashed its net sales forecast to 30 to 35 billion euros from the expectations of about 30 to 40 billion euros. And the guidance came in 15 to 20% below expectations for Q3. We saw that ASML net orders were 2.6 billion euros compared to the consensus of 5.39 billion euros, so a very drastic difference right there. Meanwhile, quarterly net sales were 7.47 billion euros, beating the estimate of 7.17 billion euros. And we saw that the CEO, Christophe Fouquet, mentioned that while development in artificial intelligence remains robust, other market segments like logic and memory were taking longer to recover, and this trend would likely continue into 2025. Not some news that the market liked. Naturally, we saw a lot of sell pressure into yesterday's morning session, and we saw a lot of negative delta that was created by net large sellers, especially in the S&P, throughout the majority of the session. So something that we'll take a look at very soon. So ASML, losing in China due to the current U.S. and Dutch export restrictions set to place to curb China's AI capabilities. So we expect China to come in at around 20% of our total revenue for next year, which would also be in line with its representation in our backlog. ASML CFO Roger Dassin said this means that a massive reduction as revenue from China account revenue in the previous quarter. And separately, a Bloomberg report mentioned that the U.S. officials have also been in talks to set a cap on export licenses for certain nations in interest of national security. So with the primary growth driver, China, gone, it could be a while before investor sentiment on ASML holding NV stock turns around. And I don't think that shareholders need to sell, but you could start to see kind of a range-bound momentum and some worry. We're gapping lower right now on ASML, so it affected yesterday the market overall. Based on that earnings report, it affected the other semis. But all in all, right, if we start to see weakness in ASML today that gets overstated, we could see some drag down on the other semis and equities. But you have to understand that they're not. They might see it, like the investors and like market participants might see it as like a prelude as to what's to come for the big chips from the U.S., but they're not. Downside on this equals just like destruction in Nvidia, which is most likely going to attempt to pull the market lower. So a big factor in yesterday's downside, and what could that lead into realistically? The S&P and the Nasdaq are trying to rise over the last 2 weeks on very crappy volume, so they're just pulling back, looking for better buyers realistically. So it's going to take a lot, I think, to shake up that sell side from yesterday and see if we can get that push higher. Today, it's going to take a lot of buying. We don't really have too much news today, so market participants are going to be very focused on how these equities kind of react at some of their key areas. So when we look at this on the S&P, we've had two sessions, Friday and Monday, with extremely low volume on these like extended P-shaped volume profile wicks. Like you can see down here, this was on Friday, and we're trying to hold the lower band of that balance as support structure. And then we also have Monday, 730,000 session on Monday. That's really, really low. So it's a very easy pull for the sellers to counteract that buying, right? Yesterday there was 1.1 million shares traded, nearly 2 times as much as that Monday rally. So a lot of that sell side was very, very constructive and like, I guess, passive selling that was going on. It was very structured selling because the profile in itself, the composition of the profile isn't anything like massively imbalanced, meaning like you don't have this like red wick and then all the volumes concentrate into the lows. It was step-by-step selling throughout pretty much the majority of the day. So this kind of sell pressure, right, tends to kind of hold out and hold the current trajectory of the market. So today, as I'm looking at the S&P, it's vital that if you're a buyer, if you want to be buying this, if you want to be long, you need to see a very strong, robust expansion above 58.68, 58.70 to get that next leg to the upside in these markets. Otherwise, it's going to be a very difficult path for these buyers to actually come through. They could come through at lower prices, but the reality of that situation is you need to see that expansion above those regions to actually hold out the bid. You look at like Delta, you look at things that give you some kind of understanding